Welcome to Market Week in Review for the week ending October 27th, 2023. I'm Sophie Antel-Gibert, and I'm joined today by my colleague and friend, Paul Eidelman, Chief Investment Strategist for North America. Hi, Paul. How are you?
Yeah, great, Sophie. How are you?
I am very good, thank you. Okay, two topics. You ready?
Yeah.
All right. First one is U.S. GDP growth, and the second one is about interest rates globally. Sound good?
Yeah, it does.
All right. So U.S. GDP growth came in at 5% suddenly for the past quarter. Trick, treat, where are we? I know Halloween's next week, but are the markets serving something up for us?
It was a huge number, but I think it ended up being a trick for financial markets where we're getting good news, but that's been bad news for equities because on the back of all of this resilience that we've been seeing for the last couple of months now in the United States, most notably the consumer doing quite well, that's caused longer-term interest rates to rise pretty considerably over the last several months now. And those high interest rates have been a headwind for U.S. equity market valuation multiples. And so if you kind of go back to the end of July, markets at that time were close to their highs for this year. We've had a pretty notable sell-off subsequent to that. The S&P 500 index from the end of July to Thursday afternoon here in Seattle is down about 9%. The Nasdaq index is in correction territory, is down about 11%, and the Russell 2000 index, sort of a measure of small cap performance, is down 16 or 17%. So definitely some economic resilience and good news from a macro perspective, but that's created challenges for financial markets.
So interest rates, I think you said it about 5 times just now. I wasn't keeping count, don't worry. But
Yeah.
I know that it's a big focus for you at the moment. We had some central banks, European Central Bank, Bank of Canada, met this week. What's the sort of interest rate picture globally at the moment?
Yeah, it seems like central banks have all been going through the same problem. They all had inflation that was too high. It seems like we're getting closer to the end of that hiking cycle now. Both the European Central Bank and the Bank of Canada left interest rates unchanged this week. It looks like their economies are starting to slow down. The central banks think their policy rates are restrictive, and I think they're now increasingly willing to kind of wait and see here to kind of see how conditions evolve. It seems like we're on a trend towards slowing growth and probably moderating inflation. And as long as that holds and they can stay convicted in that idea, hopefully we're kind of past the worst of it in terms of the rate hikes at this stage.
Terrific. Well, thank you, Paul. Unfortunately, that's all we have time for today. I know you're incredibly busy, so I'm going to let you get back to it. But thank you so much for having joined us.
Sure.
And thank you for having joined us. We'll be back again soon.
Hi, I'm Eric Risteman, Chief Investment Strategist for Russell Investments. If you like what you saw in this video and want to see more like it, please subscribe to our YouTube channel.